Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Friday, happy Aloha Friday as we say on the islands, 15th day of July 2016, and this is the Daily Report for Gold and Silver, our weekend review in which we combine it with trending markets so that we get an overall sense or feel for activity in the markets as a whole this week, as well as our forecast for what we believe we'll see next week. First of all, to gold. After having a tremendous upside surge in a rally, which really began at $1,200 per ounce, taking us to an intraday high of about $13.71. This week, we were filled with profit taking in the gold market. Gold off about $3 today, $13.29. This is basis the August contract, of course. Low 22, high has been 1337. But if you look at our daily chart, our weekly chart, which is here, you can see the tremendous downside move experienced this week in gold. So traders, as I said in our opening statement, in terms of what we're looking at in gold, I truly believe that this correction that we're currently experiencing is a release valve and really to be expected. Now, typically we'll do this with a daily chart, but I want to look at a weekly chart so we can get much more of a broad scope or big picture of the market. Consider this, the market absolutely, end of last year, beginning of this year, 2016, hit this record bottom. This is the lowest price the gold had traded to since being at 1920 and moving down. I believed then, as I believe now, that absolutely ended the long protracted corrective period that we experienced through 2012, 13, 14, and 15 as the market dropped from $1,900 to $1,000 an ounce. That being said, we entered a dynamic rally stage in which our first real rally took us from these lows to approximately, call it 1280, 1282 in that area. It's what we are labeling as our wave one. From there, we went into a correction, and that correction was an A, B, C correction. It wasn't an irregular correction in that our B wave, our impulse wave on our correction bound count was actually above that of our rally wave, which was wave one. And that took us to a low of about $1,200. From there, we had this tremendous spike from $1,200 up to $1,370 plus. Now, when we consider that, there's a couple of key areas that we want to look at first of all, but most importantly, let's take a look at the big picture. When we consider the move from just above 1,000 to the area of 1373, I've plotted a very, very large fib retracement, and that fib retracement 50% point comes in right here, just at around $1,200 per ounce. Why is that so interesting? Because that's the beginning of this most current rally, our wave 3 rally, and it really shows us that we had a dynamic move up. We had a correction that took us back to the 50% mark, and now we went back into rally mode. So traders, I've loaded up our daily chart for the next set of examples because what I really want to focus on at this point is this last rally that we have really experienced since the market traded to about 1,200 up to these recent highs at about just below, call it 1380. And when we do that, what we're trying to ascertain is the subcount behind this long wave 3 that we have on our daily charts. And when we do that, the way that my count is looking at it is that when we went from 1,200 up to this area at about 1320, we came back down to 1254. That would be our wave 2. We are now within, or we were within a wave 3, that wave 3 terminating at about 1380, roughly in this area. The interesting thing is when we do a study here, the distance moved, in other words, the range of price change in wave 1 is exactly equal to the price range from 1254 up to these tops. So we could have concluded our basic wave 3, our minor count wave 3 here and gone into a wave 4, or this could still be part and parcel of a wave 3, taking us rather from a extension of 1-to-1 to a little bit longer extension. And I've kind of plotted those different price points out on this chart. As you can see, what we've basically done is an extension beginning here, going to the top here, and then moving our start point right here. When we do that, our 1-to-1 is this blue line here. Let me move this over just a little bit more. I'm sorry, I cut that off. So as I said, our 1-to-1 is basically from here to here equals from here to here. Now, on a dynamic rally in the market, you will get a wave 3 that is greater than wave 1. Realize that the rule, the Elliott wave rule, is that wave 3 cannot be the shortest of the 3 impulse waves, 1, 3, and 5. So that we could be looking at some sort of a 3 count here and then move back up to about 1400. That's quite possible. Now, the way that I'll really determine what we're looking at is we then have to look at the amount of this current retracement. And what I mean by that is the move from 1254 up to these points at 1378 and subsequent retracement, which has moved it down. And that's what these hash marks are here. A 38% retracement takes us roughly to 1330. That's here. A 61% retracement takes us roughly to 1301, which is right in here. If the market, in fact, finds some support in this area and bounces off of it, my sense is we're probably still in that wave 3. If it breaks below this point, I believe we could see the market move as low as 1300. But then at 1300, I think that we will have concluded the correction, because in essence, we would have seen the market retrace 61% of this rally from 1254 up to 1378, and that's what would plot this 1300. So I think we're going to have a buy opportunity, whether it's lower at 1300 or we find support in the area of 1330, which at this point is a little bit less likely. At one of these points, we are going to see a tremendous buying opportunity. Silver also trading lower on the day and the week, but nominally so when you compare it to gold. It is trading above $20 at $20.09. Look at this weekly chart here on the right. You can see that this red candle represents where the market opened on Monday and closed on Friday. We have seen a range, but it is not down as significant as we are looking at in terms of a drawdown in gold. And so what does the most recent price action really tell us about silver at this point? Well, as I said, there's no doubt, look at the range that we had between the open and close. It's a very doji-like candle, which tells us that we have consolidation in the market and a potential key reversal area. The other thing that I'm looking at is I've got one fib retracement from these highs at $25 down to these lows that we're at that one point when we actually broke below $14 per ounce this year, last year. But considering that you could have bought silver at $14 an ounce at the beginning of the year, and right now it has a value in excess of $20, that's a tremendous, tremendous move to the upside. 61% retracement comes in at 2074. I think that we have some resistance there. I also believe we have resistance at 2156. If silver follows in line with the precious metals and they continue to be soft or consolidating next week, we could see some consolidation here, but I see absolute support in the market at about 1850, although I'm not convinced it'll go that low. But that's if you look, that's these series of tops that we had, and this came in back in February of 2015. Crude oil trading higher on the day, higher on the week, although nominally so, $45.96, call it $46 a barrel. And as we have talked about all week, I do expect crude oil prices to continue to be range bound. My target is still between $42 and $44 per barrel. Traders, there's absolutely no doubt. We have had crude oil hit some real resistance once it went to this high at around $52 per barrel. I thought the high might be as high as about $50. I got it wrong by about $2. But what we can say is that this upward slope or bias to the upside is absolutely over. The market's currently trading at around $46 per barrel. And when we look at this upward channel line, you can see that over this last week, we've broken both in and out of this lower, what I believe is now our resistance line in the market. The other thing about crude oil is that it is absolutely become range bound over this last week. But I will say this, that the lower price in crude oil, although not a positive factor for energy companies, is absolutely a positive factor for global corporations that utilize petroleum products, but not necessarily produce them. And of course, traders, the big news this week is that we have seen a tremendous rally, upside surge in the U.S. equities markets. It has absolutely been a risk-on week, with the Dow Jones Industrial Average closing to new historical record highs day after day, including today, 18,516, up 10 points on the day. Weekly chart, you can see the major breakout that it has had above these former highs. S&P on the day, of course, closed off a little bit. This is the E-mini, off about 4 points on the day. But for the week, Standard & Poor's also closing at a new record weekly high. And to clearly illustrate the kind of move we saw in equities this week, I draw your attention to our weekly Standard & Poor's vis-a-vis our E-mini. And this chart clearly shows you this breakout, absolute and utter breakout above the former record tops that really came in throughout 2015 and occurred right before what I label as the August meltdown, Chinese concerns about the Chinese economy. And then, of course, we had our Christmas or Santa Claus meltdown, in which we saw the market really beginning about mid-October trade to a new low at about 18,000 on the Standard & Poor's. But from that point, meaning here's our line, effective line of 2016, we had that bottom formed right at the beginning of the year. From there, we went into a subsequent rally that took us up to about 2,100, a correction from there, and then you can see over these last couple of weeks this major push above this price point. My current upside target, should this rally continue, is 2,200 on the Standard & Poor's 500. Traders, absolutely no doubt, a most interesting week in the markets overall, with the U.S. equities moving to historical highs on the week. As we said during the report, when you consider the global environment right now for global companies, U.S. equities is the place globally to put your money in terms of a risk-on scenario. How long will that last? How high will the market go? Well, only time will tell. As far as gold goes, we've talked about two distinct areas that I believe we should really look for in terms of where we could see gold find support. This correction that we are experiencing, I believe, is A, to be expected, B, it's absolutely a release valve, and C, and most importantly, it will give us the opportunity, whether it's early next week or mid next week, even a week following that, for a tremendous buying opportunity in the precious metals. And silver has really come in its own. It has traded dynamically, and it has maintained that upside momentum even in the face of a weaker precious metals markets, as we saw this week. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you next week for another daily update and review. Bye-bye.